So guys, ever since the listing of LIC, this stock has been in focus because it has destroyed a lot of investor wealth in a very short period of time, and I'm sure it has also disappointed a lot of people because people who invested in the stock as well as people who are thinking of investing in the stock, they just don't seem to find any bottom of the stock, right? Because it continuously day after day after day after day this has been falling, and so people are wondering exactly where is the bottom of the stock and what to do about it, right? So now when this stock was listed on that day, I made a video and I specifically mentioned one very important point which I want to re-emphasize, is that whenever a stock lists at a discount or when the stock disappoints at the time of listing, we should never be in a hurry to invest in the stock, right? So you can go back and watch that video again because it's a very important point. Now, why? So the reason behind that is that what is a stock market, right? Stock market is a price discovering mechanism. Means this is the place where buyers and sellers, they come and there is an interaction, there is a supply and demand which determines the fair value of the stock. Now, when a stock is listed, at that point of time, not enough buyers and sellers have participated to know exactly what is the fair value of the stock, right? So when the stock got listed somewhere around, I think 900 rupees or something like that, right? So that is when the discovery process started happening, and it seems that clearly it was overvalued because the sellers are much more aggressive in this case as compared to buyers, right? So whenever there is an IPO and there is a discount, you should not be in a hurry to buy. That's like the rule number one. So in my case, and I specifically mentioned that in the previous video as well, that okay, I will not be investing any money in LIC until it crosses the IPO price. So that having a simple rule like that helps us avoid bottom fishing, right? So if you, let's say, bought LIC at 825 believing that this is going to be the bottom, you will again be sitting on a big loss, right? So we can avoid these kind of situations so that we can let the market do its own due diligence and let the price discovery happen, and then eventually at some point of time there will be a bottom, right? At some point, maybe it's we don't know, right? It's going to be 700 or it's going to be 600, it's going to be 500. So investing should be out of question, right? That's for sure. Now let's talk about trading. Can traders look at LIC for taking a long trade? Now, as far as trading is concerned, it's sometimes gives us a good opportunity, especially a stock like this. They give some good trading opportunities both on a intraday as well as on a swing trading basis, right? So intraday, for example, I mean today there was a very good bounce on the stock, and interestingly enough, I mean even I tried trading this, but it did not work out, of course. I had to incur a small loss there. But on an intraday basis, these stocks can give reasonable bounce backs. But that is something which is subjected to price action, right? So intraday, it's very hard to say exactly when you will get the opportunity and what will be the day when you will see a big move either on the upside or the downside. But for a swing traders or for positional traders, there is something which can be done with reasonable accuracy, and that is something what is called as a base formation, right? So whenever we see a stock like this, I look for a way to establish some kind of a base, right? So a stock has fallen, sometimes it can get a temporary bounce back and then again it can fall back, so we don't know. So a base formation is a process where the stock stabilizes in a price range, right? So let's say, for example, here, right? Let's take, for example, let's say this is the price range in which the stock kind of stabilizes. Every time it comes down, it kind of finds some kind of a support, bounces back. And after a good base formation, when the stock starts to show signs of reversal, that point turns out to be a great trading opportunity, either on a swing trading basis or on a positional trading basis, right? So my advice for all of you guys who are looking for long positions, short positions, of course you can take, but you cannot carry those positions to the next day, right? Because it's not in futures and options. So if you're looking for something on the on a positional side or a swing trading basis, you might want to wait, right? Don't be in a hurry, right? 1 or 2 days of up move, they tell us nothing. right? So the last thing you want is getting trapped into this stock again if it starts falling. So give it enough time so that a nice clean base formation happens, and when that happens and then the range is broken on the upside, that turns out to be a much reliable setup than any 1 or 2 days of up move, right? So that's basically what I wanted to share in this video.